From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 7, 2017. Today we're going to be taking a look at the NZD-USD, the New Zealand dollar, versus the US dollar for today's trade analysis. Now there's two different trends that we want to take a look at here on the daily time frame. The first one is the blue trend line on the left-hand side of the chart. You can see it clearly significant uptrend here for the New Zealand dollar. In the past several weeks, though, we have seen a downtrend that started all the way at the top of the blue trend line as the market has been pressuring lower along the red trend line. Now, it's come to a slowdown here around the 100 period simple moving average. You can see it came down into the green zone, the 7,200 level. It spiked underneath the moving average a little bit, but now sitting right back on top of that 100 period simple moving average here on the daily time frame. So the question, of course, is, are we going to see continued support here and a turn back higher in the direction of the blue trend line, or are we going to see the market turn back lower again and continue the direction of the red trend line? Fibonacci from the bottom of the blue trend line to the top of the blue trend line puts the 50% retracement level, or halfway point, right around the 7185 level, right around that 100 period moving average. So there's a dashed blue line that goes along that area where the 100 period moving average sits. So we know that the market came down halfway of this blue trend and now is just stalled out, waiting for the next move. You look back in time, and I've circled them so you can really see clearly, this green shaded area between 72 and 7220 has historically, and you would expect it around a handle like 7200, been a significant support. You can see the black circle on the far left, lots of support, several days finding support before turning higher. Then it came down again, a couple of days found support, and then made the new high. Then it came down in the most recent days, and probably I could put another circle right here. Let's zoom it in one time. Where it came down pretty close, bounced up. We came here, bounced up. We broke underneath it, targeting down to the mid to low 7100s. But now here we are, right back above the 7200 level. So this is a key player in our trading decisions. If we're going to see the market turn around and go back up, the dip underneath, the sudden rally, and sitting on top of it gives us a clue that maybe the buyers are just not ready to give up on this currency pair. So what we're looking for are evidences of buying pressure, buying orders. And we can see a couple of days ago a significant rally when it pushed back above 7,200. Evidence of buyers present down here around the 100 period moving average. Let's go ahead and take it on down to the 4-hour time frame. And as we get down here, we get a different picture of that green zone, don't we? Of course, we could see last time when it came down here where the black circle is, it came down several days, found support before moving back to the orange zone, finally pushing through, targeting down here into the yellow shaded area, several days, I guess, finding support down around the yellow zone, making its rally, and now here we are once again sitting on top of 7,200. Take a look. Since yesterday, we've just been sitting here. We saw one quick spike down here and a sudden reversal, and this is what we're typically looking for. If we're looking for a sudden infusion of buy orders, we're looking for a small body with a long wick on the bottom of it, or a bullish engulfing candle. These are clues that there are buyers present, or buy orders present here into this 7,200 or just underneath 7,200 level. So what we're looking for now is for it to stay above this area with confidence, looking for support into this area. We really just don't want it to get below this area right here. You can see that area where there was resistance, where the red line is resistance, helping us identify that now as a area of support. So that resistance offering support here, sudden infusion of buy orders. So we're looking for an opportunity to go long and target higher levels. If it stays above the green zone and gets back above the green zone, let me take this line off real quick. If it gets above the green zone, we'll look to target back to the orange shaded area. That's pretty easy to see. The last time we were here, black circle, it went back to the orange zone. And of course, if it can ever break through there, which happens to be this 382 of that previous trend range, by the way, we would look for it all the way back up here into the pink shaded area as our next target. All in all, the risk is that the market changes its mind, pressures underneath 72 again, sellers come back, maybe some positive U.S. data comes in later, and we look for it to target back down to the yellow zone. So stop losses, if you do take the buy, are underneath the green zone, likely underneath today's spike low, and we're going to look for it to go back higher again. And the risk is, of course, that it turns back lower, breaks this red line, today's low, targets the yellow zone. And of course, if it ever breaks the yellow zone, we'll look for the resumption of the downtrend for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.